Ravi sir, are you there, sir?
Sir, whether presentation is visible?
Sir, it's visible, sir.
Full screen, na?
Yes, sir. Yes, sir.
Okay. Can we wait for 5 minutes? Because few people only joined. Can we wait for 5 minutes?
Yes, sir. Sure, sir. We'll wait, sir.
If others doesn't have any issue, I'll just wait for 5 minutes, then I'll start. Now
Fine,
only
sir.
70 people are there. Okay, recording will be available just 5-10 minutes.
Okay, sir. Fine, sir.
Actually, sir, my suggestion, I think, if we can ask them suggestion, actually better to start around 7:30, 8 o'clock. People who should come from office, na?
Uh,
Anyway, tomorrow also, if
at the
we have
end
to
of
ask
the
their opinion.
session, we will interact, sir,
Yeah,
and we
yeah,
will
yeah,
discuss, sir.
yeah. No, till the time already 70 people are there. They might have taken permission from office and all, if I expect,
Quite
because some of my
difficult,
friends are,
actually.
some are attending from office. So just can you share your views by the time? Just 5 minutes we will wait. 7:10 I will start
Yes, sir.
exactly.
Sure, sir. Okay, sir.
Other 72 people have joined. Whether it will be convenient, if you
We
feel
will
better,
we
if
will
you start
start
around
by
7.
7:15, sir.
7:15 is also from office only. Okay, many people they have joined from office only. That's why I thought, even I came from office just now 10-15 minutes back. Yeah.
Me too, sir. Me too, actually.
7:30 will be better, sir. Even we can also tomorrow. Actually, my classes are over. Tomorrow, Chandrasekhar Reddy sir class is there. Na? If he makes some delay, see somebody is traveling.
Yes, sir. They are also
They are
staying.
finding. That's why
We will
we have to
ask
make some
them.
delay.
Okay, sir.
Tomorrow, sir, when we send the link, na, we will talk to Chandrasekhar Reddy sir, because tomorrow he is going to take the class. I'll ask him. For
Okay,
him,
sir.
if there is no issue, we will start at 7:30 only tomorrow.
Fine, sir. Okay, sir. We'll do according to that.
I'll talk to Chandrasekhar Reddy sir. Now itself, I'll talk to him.
Okay, sir.
I don't think there will be a problem, but still, I'll just take a consent from him.
No, actually, some people in chats also saying that 7:30 will be fine.
Yeah. One small updation. Whoever joined just 2-3 minutes back, tomorrow and day after tomorrow, classes of Chandrasekhar Reddy sir. We will plan to start around 7:30 or 8 o'clock. We will inform you tomorrow in the message. Okay. So with we need to take consent from Chandrasekhar Reddy sir. That's why officially I'm not announcing. Tomorrow, after taking consent from him, we will inform you exact time. But not at 7 o'clock. Definitely it will be at 7:30 or 8. So that conveniently you can come and attend the session. Okay. Sir, actually, credit policy and CRM policy, what I have done is I have not gone through 516 and 520. This presentation, before this, whatever is there, around 100 slides are there. But these are all last year based on credit policy circular and CRM I have prepared. This year I have not seen till now. 516 circular is credit policy and 520 CRM. These circulars I'll verify tomorrow and I will update these two parts in my presentation, and then only I'll share my presentation. Now in this session, what I'm going to take is other than 516, 520, because in the exam today when I'm reading one circular, it's a credit policy issued only, credit policy section only issued. 5 questions came, but those 5 questions answers are not available in 516. So we might have gone through that circular to give good attempt in the exam, especially in 3 to 4. So I am also expecting some questions from that, especially when one big circular is there with regard to valuation of securities. From that we got 5 questions. So that circular I have read. So I would like to discuss on that circular only today, and all other circulars also. They are all small, it's 1 or 2 pages only. So those things we will discuss. So some important changes after September 2023. One is modification of NBFC module. In NBFC module, Canada Internal Rating Model, they made some changes for exposures above 2 crores. So they have introduced 3 new scorecards. That is NBFC housing finance companies, NBFC microfinance companies, and NBFC's other categories. Okay, this is September 2023 or August 23 circular. Now, this is 621 bar 2023. Very important for understanding also. Rate of interest. Whenever we are giving any VSL, the rate of interest, how much we can charge to the customers. In the circular, bank says up to 2 crores. Generally, what we are charging term deposit plus 2% is up to 2 crores. But after that circular only, I also came to know about 2 crores. If we are giving VSL, rate of interest is only term deposit plus 1%. It is not unilaterally TD plus 2%. Up to 2 crores only term deposit plus 2%. Above that is TD plus 1% only. And up to 90% of the outstanding balance, branches can give VSL. In delegation of powers, it was more discussed with regard to how much margin, what are the powers for RO head, CO head, that I will discuss if time permits when I'm opening DOP circular. Now, this is the important circular I felt. So yesterday and today I have gone through this circular to give you. Actually, I told in my sessions also once better to go through this circular. Okay, but I have almost taken the gist of that circular. Let us see what bank has discussed in this particular circular with regard to valuation of various kinds of securities and credit exposure. This is the circular issued through credit policy section only. It's a part of credit policy. Okay. Now, first, entrustment of valuation work to empaneled valuers. So, whenever we are giving valuation for fixed assets or current assets, including book debts. So, fixed assets means land and building or any agriculture land or vacant land, the fixed assets. Current assets means stock audit, book debts. Whenever we are entrusting these chartered accountants, bank says minimum at least one assignment should be allotted to panel valuer. This is the minimum thing bank told, at least one assignment. Then maximum work in respect of current asset. That means you can say stock audit to panel valuer in year is maximum 6. Maximum 6 only we can entrust. Then if at all a panel valuer has submitted a report and later date we came to know that there was a fraudulent report, then generally bank will check the valuations what he has done earlier. So bank in the circular said revaluation shall be done by CRM section CO as per the following. So what type of report he has given, based on that bank will take a call with regard to fraudulent reports. For example, this fraudulent report is with regard to third party entity like stock audit, legal LIE, TEV, SARFAESI. If these type of audits are concerned, bank says revaluation will be done in all other loan accounts where the service of the TP is sought during last 1 year. Last 1 year, whatever valuations he has done, all will be reevaluated when stock audit, LIE, TEV, and SARFAESI has taken. For example, only fixed asset valuation has done, land and buildings and all. Then bank says revaluation to be done 10% of loan accounts. Only 10% of loan accounts where the services of the said TP is sought during last 6 months. Last 6 months, whatever valuations he has given, out of which 10% will be cross-checked by the revaluation they will do when it is fixed asset. This is normal stock audit and all means last 1 year all the reports they are going to reevaluate. Okay, then but 10% he will check out of 6 months. But what circle job is, circle to ensure whatever fixed assets bank is reevaluating, in that high valuations are including revaluation. See, 10% we might have got 10 accounts, for example. Out of the 10, one is maybe 10 crore is there. That should be main criteria. So bank says circle to ensure that fixed asset with high valuations to be included in that revaluation. This is what circle part. And whatever charges incurred, that will be borne by the bank only. We are doing revaluation. So borrower will not pay. That's why bank is going to borrow. Like that we will remember. Next, utilization by other circles. One valuer is there in Hyderabad, but some Pune circle wants one valuation from this Hyderabad person. It can be done. Yes, it can be done with some permissions. Who has to permit? Risk management wing head office has to give permission. One circle valuer going to another circle for valuation purpose, it is risk management wing permission is required. Then circle will send the application, then wing will permit. Maximum number of assignments, valuation risk in respect of such valuers. That means other circles, if anybody is going. So maximum how much they can do? 3. Within the circle they can do 6. When they are going to other circles, it is only 3. Then guidance note on resolving differences in valuation reports. This is some new point. whenever valuation reports are coming, independent valuers, then how we have to take the guideline. Very important point. This is not required. I can remove. Yeah. Whenever valuer is giving valuers are giving valuations. One valuations means we will not have a cross check. When two valuations when we are receiving, valuation difference may be there. Both valuers cannot generally don't give same valuation. In those cases, bank has told generally we will go for more than one valuers for 5 crores and above. We know it above 5 crores we take two valuations. When we are taking two valuations, then bank says the valuation considered is same between the both the value within 15%. If the both the valuations are within 15% is there, valuation reports, then the average of the two valuations we will take the value. But within 15%, this question came to us. When we are taking average of two valuations, what within how much percentage that valuation should be there? For example, both the valuers variation is more than 50%. In that case, bank said we will go for third valuation from empaneled A category people. Very important point. So we should know who is coming under A, B, C, D category. That question also came in 3 to 4. So more than 15% valuation, variation, third valuation we will go. But who will do the third valuation? A category valuer will do. Okay. And once a valuer category has done, then how the next point is what they're telling is lowest of the three valuations shall be considered. Lowest of the three valuations will be considered. Then further branch to examine the valuation reports of high valuation seek explanation from the concerned valuer. For example, 20-30% variation is there. So we have to call explanation from the valuer why he is given such a variation. If explanation is not satisfactory, even we can depanel that panel valuer by recommending to CO. Okay. So above 5 crores, we take two valuations. Less than 15% variation, we will take average. Above 15% variation, we will go for third panel valuer. And the third panel valuer is only category A, only will do that valuation. And after that, the least valuation will be reckoned for that particular proposal. This is the concept. Now comes A, B, C, D category of valuer. This is one more question came to us. Who are all A, B, C, D? So A, B, C, D. First of all, D category, only for fixed assets he can do. He cannot do current assets. He cannot do current assets valuation. Only fixed assets like movable, immovables only he can do. Okay. Up to 2 years experience if he is having, he will be given up to 1 crore valuations. So this one, D we will negotiate first, then comes to first category. A category. A category, more than 10 years experience without any limit bank and interest valuations. B category person, 5 years to 10 years, up to 25 crores only, we can give valuation. 2 to 5 crores, up to 5 crores only valuation job, we can entrust to that valuer. This table is very, very important. How I remember is A, B, C, D. A is the top valuer, A category valuer, no limit. B category up to 25 crores. C category up to 5 crores. Last category is up to 1 crore. Like that, we can remember. Number of years also we have to remember. First one is more than 10 years. Second one is 5 to 10 years. Third one is 2 to 5 years. And last one is up to 2 years. But examiner, generally what I observed, he asked us both the questions to us. But he asked it in a different way. Day before yesterday also I told you, 4 years experience person. That means this block he has asked. Which category he belongs? C category. How much valuation he can do? Up to 5 crore. So this question came to us. So very, very important slide. We have to remember the answers in our memory so that we can give the correct answer. Okay. This is with regard to A, B, C, D type of valuers. Now some key highlights. Key highlights what they told is in this value. Why we do valuation is it sets out the selection of collateral acceptance criteria, valuation of collaterals, inspection and insurance of collateral, enforcement of security interest, custody of title deeds. These are the key highlights they told. Then this particular policy, this valuation policy, this is standardized procedure for valuation of assets and empanelment is proposed to following aspects. What they are following, they cover standardized valuation methodology. They will do process for valuer empanelment, performance management, and standardized reporting. I don't think question will come. Just have a glance on this key highlights and what are the covering aspects considered. Okay. Now comes Stock audit and receivable audit. Stock audit means maximum 2 to 6 weeks they have to complete. For auditor has to complete within 2 to 6 weeks. Then migration to rating and stock audit. Wherever ratings of an account downgraded from low to normal or moderate to high. See, this is called one notch down in risk rating. Low to normal, normal to moderate, moderate to one notch down. Agar low to moderate means two notches down. So bank said something with regard to stock audit valuation. Immediately, if the risk rating is coming down, means risk is being increased on their borrower. So bank wants to go for valuation of stock audit. They want to verify. So regarding that, bank said some guidelines. Let us see. Whenever the ratings of downgraded from low to normal or moderate risk, immediate valuation within a period of 3 months of such downgradation shall be undertaken. One notch down within 3 months we will do, but one condition is there. If the current valuation report is not older than 6 months, for example, maybe March account was downgraded to one notch. Just January stock audit over, then we need not do. Then we need not do. So whenever one notch down case, actually we are supposed to do within 3 months, but one exception is there. If within 6 months, just older than 6 months, if any stock audit is there, means we will not go for revaluation. But if account is downgraded by 2 notches, low to moderate is called 2 notches, normal to high risk is called 2 notches. When 2 notches are done, then bank says stock audit within a period of 3 months, irrespective of the conditions stipulated above, that has to be done. So one notch, also 3 months, 2 notch, also 3 months. Please note, both are 3 months, but only one exception what they've done is one notch down means within 6 months, earlier, older than 6 months, previously 6 months before, any stock audit conducted, we can exempt that account for revaluation. This is the concept. Then takeover of accounts, stock audit is a pre-release condition. Everyone knows it, no confusion. Now this question also came to us. Periodicity in conduct of stock audit in NPA account, they asked us. Once the account became NPA, immediately we want to check whether stock is there in that unit or not. So this part has been given for stock auditor. Now the rule says tomorrow that account may be upgraded within 2 days or 1 month. So bank, what they have done is 1 quarter they have taken cooling period. This question has come to us. 1 quarter means almost 3 months. 3 months we will wait for upgradation purpose. If still account is not upgraded, then within 6 months we will go for stock audit of that account. This both the questions we made blank. So cooling period how much, or if cooling in case continues NPA even after cooling period, stock audit within how many months pakka we have to do? 6 months. Okay, very important conditions. Then DOP for waiver of stock audit. If it is a low risk, normal risk, moderate risk accounts, up to circle head CAC can waive stock audit. But high risk account, no one is having powers to waive. This is one important point with regard to waiver delegation of powers. Now I came to valuation of fixed assets. So valuation of fixed assets is first periodicity of valuation we will see. If it is a land and building, other than a land and building, plant and machinery, everybody knows normally we will do every 3 years, no confusion. But circle head is having some powers that we should note very importantly. This question we can expect from that fellow. Circle head CAC and above authorities, they can go for lower frequency. That means less than 36, they can go for revaluation. But in case such type of lesser frequency, if circle head has gone or circle head and above has gone for revaluation, then frequency lesser than 33 months, generally 36 months, 3 years, generally 3 years. 3 years means generally deadline that nobody will wait. So 35th month or 34th month, we will give for valuation. So bank has given that question of 3 months. So 33rd, 34th, 35th, 36 means okay, bank left okay. It's normal valuation only. But less than 33 months, if any circle head and above authority has considered, then bank says the valuation will be taken is 85% of the value of the property only. And one more important point is that valuation should be carried out by the valuer other than the valuer who has given the earlier report. Last time, 3 years back, X panel valuer has given a valuation report. This time, because it is going less than 33%, circle head has taken a call. Then X should not do. Why? Another new valuer has to come. He has to do, even after his valuation report, latest valuation report, that proposal, that sanctioning authority has to consider only 85% of the market value only. These are the conditions. It is exceptional. Wherever two answers are there, very, very important. You can ask less than dash and market value 85%. Both are very, very important. Then comes to guidelines one, revaluation of fixed assets mortgaged under retail loans. Earlier, these guidelines were not there. Only we used to do normal MSME collaterals only. Now, 2-3 years back, bank introduced one more valuation, that is revaluation of fixed assets mortgaged to retail loans. What type of retail loan generally we take? Properties mortgage, housing loan, Canara mortgage, Canara rent, LRD, and Canara site. In these cases, if we might have taken, generally mortgage will be there, house will be there. Then in that sense, where loan outstanding is 50 lakhs and above, if loan outstanding, not property, underline, not property, if loan outstanding is 50 lakhs and above, revaluation of the property has to be undertaken once in 5 years. This is only for standard assets. So retail loans every 5 years, not 3 years. That too, outstanding loan should be 50 lakhs and above. And whether this is applicable for our staff also, maybe we have taken a housing loan 1 crore. Whether it is applicable, no. Bank says employees housing loan, retired employees, even housing loan partly availed by employee HL scheme and partly under HL Reserve Bank of India scheme. All are exempted. Employee housing loan exempted, retired employee exempted. If any employee for shortage of funds, if he took employee housing loan also, RBI housing loan, all are exempted. They may ask you what are all exempted. So that's why I just given a clarity. Who will revaluation? Who will give? Always revaluations. Party is not interested. Bank is interested in the safeguarding the interest of the bank. So bank will bear, like that we will remember. Now, maximum fees, market value of the property, how much fees we have to pay to the valuer here. Here, up to 1 crore, it is 2,000 rupees plus GST. Above 1 crore, 2,500 plus GST we have to pay to the valuer. And the GC, which we have to debit charges, is 4200 Just I am showing you, if at all he asked GC number, we should not get just have a look on that, so that in the exam minimum we will remember, we will try to remember or retrieve the answer. Okay, this is with regard to valuation of fixed assets. Now comes valuation of only landed properties. That means vacant sites. Whenever we are taking vacant sites and all we discuss under CRM policy of the collateral management policy, it comes. Whenever we are taking vacant site or any land and building, bank has made two differentiations. One is less than 1 year, above 1 year. So less than 1 year, if any property is coming to us as a collateral security, any security, we will take different way of taking the value of the property. More than 1 year means generally we take normal valuation. Okay, this is the first logic we should remember. Then comes vacant site. If it is a vacant site, if somebody is giving for a mortgage, if it is less than 1 year, he is acquired less than 1 year, bank says only sale deed value we have to consider. If land is purchased beyond 1 year, 1 year, 2 year, 3 year, 4 year, then also we take 85% of fair market value. Very, very important points to remember. This particular, actually I have not read CRM policy. In CRM policy also, 520/2024, in collateral management, these points are available. If he read 520, if he read 801/23, this question is pakka. So that's why we should very clear on these valuations. Then comes valuation of immovable properties. That means land and buildings or commercial shops anybody is giving. Then also same rule will apply. Valuation is different. That is recently purchased, that is 12 months prior to the date of valuation. If he has purchased, then bank says sale deed value, same sale deed value only, or guideline rate, whichever is higher. Very, very important answer, even for our practical purpose also. When we are working in MSME Sulabh or in RAHS or any collateral security, when we are taking, we must see customer, when any property is coming for mortgage, we should see when that borrower has purchased, date of purchase. From date of purchase to date of valuation, in between only 1 year, just 1 year gap is there, less than 1 year, then we should take sale deed or guideline rate, whichever is higher. I will tell you 1 minute. I'll tell you the logic here. 6 months back, somebody purchased a property, some house. It is only 1 crore. Registration also 1 crore. Generally, in value, if you observe, nobody will go for registration more than government value. Government value, for example, 1 crore means people also do registration for 1 crore generally. Maybe to avoid stamp duty and all, they will do that. So 1 crore when they have purchased, so within 1 year, bank wants to take only that 1 crore only actually. But bank, why they said guideline rate is, see, for example, he has purchased 6 months back, 1 year. That time government value is 1 rate. Later, government increased that value from 1 crore to 1.5 crore. Imagine. Maybe some square yards, at that time, 1,000 square yards is around 10,000. Now government itself has increased it to 15,000. So government itself has increased it means after 6 months, when the customer came for us to mortgage the property, we can consider na. That's why bank said at the time of registration, whatever value we have registered, or later date if government varies the rate, if this is increased, so we can take. That's why they said whichever is higher. So that is with regard to land and building and any immovable properties is the way. If it is more than 12 months means we will take fair market value. Okay. Next, valuation of immovable properties, plant and machineries. Plant and machineries, bank said wherever value of plant and machinery is there, 50 crores and above, two valuations are required. Underline. Because generally what we know is LSRs above 5 crores, two LSRs we will take. Valuations above 2 crores, we take two valuation. But in case of plant and machinery, 50 crores and above only we take two valuations. Very important point to remember. Then comes if the property is acquired by way of will or a gifted settlement deed recently. See, within 12 months, for example, in this case, I told he purchased the property. That's why we have taken failure guideline rate. But my father has given a property just 6 months back. Then which value I should take? Only government rate, only guideline rate. Okay, these are the very, very important points with regard to considering values at the time of sanctioning loans. Now comes delegation of power to waive valuation of fixed assets, including accounts under consortium accounts and JLE. Whoever sanctioned, respect to sanctioning authority can waive. Then CAC of the board and all, it is CAC of the board can, MC power account, CAC board account, CAC of the board can waiver. Now comes very important. This particular point also they asked the question. 3 to 4. This is the question is, in order to avert instances of overvaluation of immovable properties, valuation report should clearly indicate. What are all the things to indicate? We know few things very clearly without experience. Date of price of immovable, purchase price of immovable property, we know, because sale deed price. Distressed value will be there, we know. Guideline value will be there. But date of purchase is also there. This is where I made a mistake in the exam. For fifth option, what he has done is he has asked out of this, which is not a correct answer. In fifth, he has told two local nearby properties valuation, some value also he used to add like that. Wrong one he has added. So that was a wrong answer. But we should be very clear. Date of purchase is coming under here. Maybe question has come to us. I'm not expecting from you. But anyway, we should know the date of purchase and remaining three we know clearly. Fifth one will be the odd man out, whatever he keeps. Then, in respect of accounts classified as substandard and doubtful, if accounts classified as substandard and doubtful accounts, exposure 1 crore and above shall be subject to valuation and no waiver for substandard and doubtful account. So, substandard and doubtful, 1 crore and above, we have to go for subject to valuation. Then, exempted from fixed asset valuation. Doubtful asset, we can exempt also when doubtful asset their security is negligible, not available, fully provided account, fully written off under technical write-off. These accounts can be exempted. Normally substandard doubtful we cannot exempt, but wherever security is not there, security is negligible, in that case we can go. Then NPA accounts fully secured independently along with the collaterals by land and building, then it should be valued not more than 3 years old. Should have been valuation not 3 years old. Then other guidelines, very important guideline which I have seen. Generally in housing loans, retail lending, they say 10 years. Here what they said is residual age of the immovable property should be at least 5 years or more than the tenure of the loan while accepting prime collateral securities of the loan. Very important point. Whatever security is giving, so valuer also will get lifetime of the property. How much from here, how much life it should be. So bank saying if you are giving repayment for 10 years, plus 5 years, it should have life. So this is very important point to add it in our memory. Then comes valuation of assets in case of valuations report is more than 1 year old. See, depreciation to be charged. We can depreciate, we can reduce when it is more than 1 year old only. How much? Building, it is 5%. Plant and machinery, 15% per year. Vehicles, 20% per year. And which type of valuation we take, straight line or with written down value? They said written down value method only we have to follow. And land value need not be depreciated. Natural land kabhi depreciate nahi hota hai, only building will get depreciated. Then comes plant and machinery. Then vehicle valuation, they told one more point is 20% per year. This we know, 20% per year. But how the value will be considered? Insured declared value or depreciated value by the applying the written down value method, whichever is higher. So insurance authorities also will give one value, that is insured declared value. Insurance will decrease the vehicle cost and all. So that value or depreciated value by applying this 20% method, whichever is higher, we will consider for depreciation for vehicles. So simply if you ask me, building 5%, plant and machinery 15%, vehicle is 20%. This we have to remember. Now, eligible norms for empanelment of stock auditors and fixed asset valuers. So some qualifications, some experience they have discussed about each and every valuer here. So norms for stock auditors and fixed asset valuers. Generally, we give mostly this only. So eligibility norms empaneled for other than agriculture. This is not for agriculture. Agriculture we'll discuss later. Now, minimum they should do PG degree or PF diploma. Then minimum experience is at least 3 years. I always have seen their slides, always the bank has to put that. If graduate means 5 years experience. Postgraduate means 3 years experience, because maybe PG he will do 2 years na extra. So the 2 years they have reduced. That's why graduate they will made 5. PG postgraduate means they made 3 years experience. Next slide also you'll find that. Then qualification and experience of empaneled value as a agriculture land. Agriculture land means bank says no act to regulate professional valuation of agricultural lands. No act is there. No course available in our country to qualify as a agricultural land. So bank says, as per rule 8A3A, valuer of agricultural lands must be a graduate in agriculture science of a recognized university and must have worked as a farm valuer for a period not less than 5 years. So agriculture qualifications and all we cannot found, because bank said no professional qualifications and all will be there. So they will see experience only for 5 years. Minimum age requirement. Minimum age requirement. If it is an individual and proprietor, minimum 21 years for a value empanelment. No maximum age limit. Duration of the empanelment is 5 years and they will do an annual review. This is with regard to stock auditors and fixed assets valuers. This is what I was talking about. On big screen is there. See, plant and machinery, land and buildings. Everywhere you see, if graduate comes, 5 years will come. PG comes, 3 years will come. Graduate comes, 5 years. PG comes, 3 years. Okay. Last one is securities or financial assets. Here bank said it is only 3 years. Remaining all we need not remember up to here, but this part we have to remember. If we ask about securities of financial asset class, what was the qualification with Chartered Accountants of India? 3 years is the qualification. Okay. Procedural guidelines. Empanelment of valuers and stock auditors will be done by RM head office. Who will be in the committee? In the committee or CGM of RM wing, SAM wing, CAM wing, IO wing, RLFP wing, overseeing project appraisal group of HO, permanent invitee. He will be permanently available in this committee. Convener shall be DGM RM wing. He is member. DGM will be convener. Out of this quorum, minimum 4 should be available. Out of which presence of CGM of RM wing, CGM of IO wing are mandatory. These people are mandatory. IO wing and RM wing, mandatory. Then GM RM wing, other than wing head, shall be the special invitee for the committee. If at all RM wing is headed by CGM and GM, both are available in that wing, then GM also will be invited as a special invitee. That you remember, he is a special invitee. He is a permanent invitee. Project appraisal group DGM HOE is a permanent inviting, and a quorum will be 4. Just have a glance of it. If at all you want to make a tough question, he may ask about committee also. Just to have a glance, I kept this slide. Entrustment of valuation work to empaneled valuers. Entrustment of valuation to will be permitted by circle head. Everybody knows, because CRM section circle office will place a office note, then only valuation will be allotted. Then approved valuer can continue to remain in our approved list without any break. Then allotment of valuation related to particular branch. A particular branch allotment of valuations can be permitted maximum 3 years only. After completion of 3 years of work relating to a particular branch, that valuer has to be utilized for another branch. No, that means simply we can say no valuer can be entrusted with valuation assignments relating to a particular branch continuously for more than 3 years. We cannot allot more than 3. One branch means one valuer can give work up to 3 years only. After that, he has to go to another branch. Then the valuation of securities of each borrower should normally be entrusted to specific valuer 3 times consequently to ensure continuity. Because if at all some mistakes are doing, we should find out what type of lacunas are there in the valuation. So that's why bank says continuously one valuer continuously do valuation of one borrower for 3 times continuously. Okay. This is with regard to panel valuers, current asset valuation, stock audit, how much fees we have to pay. These questions have not come to us, so we should be little bit concerned. So when a stock audit fees, manufacturing concern, other than manufacturing concern, how much fees we have to pay. Limit should be fund-based working capital or a non-fund based limit, whatever it may be. Rupees 500 per 1 crore. Other than manufacturing, lesser amount, 300 per 1 crore. And minimum and maximum also we have to remember. Minimum, other than manufacturing concern, minimum is 7,500, maximum is same, 1 lakh. I hope we have to remember this answer. If at all he asks about cost and all, we could able to answer. Okay. Circle and above authorities may consider payment of enhanced fee. More than these fees also, if they are asking, circle head is having full powers to permit. Entire fees inclusive of all expenses to be incurred with stock audit for one borrower, including traveling, boarding, lodging, should not exceed 2 lakhs. That means I told circle head can go maximum. He can go maximum up to 2 lakhs only. So this is how stock audit fees maximum we have to pay. Even stock audit fees we have to remember like this. This slide is very, very important for examination purpose. Then fixed assets valuation fees. First, fee structure undertaking valuation based on the value they told. 5 lakhs, 10 lakhs, 35 lakhs, 50 lakhs on the balance. See, up to 5 lakhs, it is 0.25%. Next 10 lakhs is, 0.2%. Next 35 is 0.1. Next 50 is 0. Next is very important. Okay. Remembering is very difficult, this slide. Just have a look. If at all question comes, we can go to nearby the answer. The maximum fees payable is 50,000. Maximum. Minimum is 2,000. So fixed asset, minimum 2,000, maximum 50,000. If it is a LPD NPA account, then 50% of the above fees only we will pay, but maximum is 25,000. Vacant land, the fee payable 25% of the above only, but maximum only 12,500. So these two are related. You can see LPD and this one is they are telling 50%, 25,000. Exact 50%, 50 ka 50, 25%, 25,000 ka 50%, 12,500 for vacant land. Like that, if we keep some clear linkage, then exactly if this question comes, we could able to give the correct answer. Entire fee, inclusive of all expenses incurred by valuer for one borrower, including traveling, boarding, not to exceed 75,000. Entire fees. However, maximum 75,000 only we can pay, but what they're again saying, circle head and authorities may consider over and above 75,000 on case-to-case basis. So fixed asset valuation maximum is 75,000. Current account valuation maximum is 2 lakhs. This is what we have to remember. And the LPD also we have to remember. LPD account, NPA account, vacant land also. Now eligibility for SARFAESI valuers. SARFAESI valuers For corporate loans, the registration of the firm, generally corporates only we will empanel. So registration of the firm should be at least 3 years old. The registration should be whatever firm we are corporates when we are registering a SARFAESI valuer, minimum 3 years old they might have registered as a SARFAESI valuer in at the time of considering application, and minimum 3 years experience as SARFAESI valuer they should have. Minimum 3 years experience, 3 years registration should be there, and should have completed at least 5 assignments successfully. At least 5 assignments successfully. 1 minute. Hello? Sir, class में उनसे बाद में बात करता हूँ, ऑनलाइन क्लास में. हाँ हाँ हाँ. Okay, so SARFAESI valuer, at least 3 years from registration, at least 3 years experience as SARFAESI valuer, and he might have done minimum 5 assignments successfully. Then only we can empanel him as a SARFAESI valuer. This experience logic is not applicable for DRT and High Court valuers. Just an exception bank has permitted. Duration of empanelment is 5 years. This SARFAESI valuer's empanelment is 5 years. Then comes empanelment of lenders independent engineers. What is the purpose of these people? Provide professional engineering consultancy services in project finance. When we are giving project finance and all, it's a huge finance, so we can't know, we are unable to know the progress and all, branch people. So these LIEs will give their expert reports, so that based on that we will go ahead with the finance. Okay, so this type of providing professional engineering consult service project finance, project implementation is reviewed based on LIE's report only. Okay, then comes norms. When you empanelment of LIE now. So LIEs can engage in infrastructure projects as well as non-infrastructure. Both we can put, no problem. Can be engaged in infrastructure projects also, non-infrastructure projects also. But infrastructure projects, infrastructure divide into core and non-core. Core and non-core. So core project, no problem. LIEs will be engaged. But in non-infrastructure projects, the LIE will be non-infrastructure projects with project cost more than 50 crores. Only LIE services will be engaged for non-infrastructure projects more than 50 crores. Chartered engineers may also be engaged at the discretion of the sanctioning authority depending on the size of the project. This amount you have to remember, 50 crores for non-infrastructure projects. Qualifications, whom we can take LIEs, companies, LLPs, partnership firms, and the proprietorship concerns. Experience, minimum 5 years. They should have minimum 5 years experience, and LIE's assignment in minimum 10 high value projects. SARFAESI told 5 assignments. For LIE, they told 10. For LIE, it should be 10, minimum 10 high value projects. Empanel period is 3 years subject to annual review. See, very confusion is there. In LIE, they told 3. In SARFAESI, they told 5. And even normal value was also they wrote 5 years. So remember, LIE is 3 years. This is the fee with regard to this LIE. I thought it is very difficult to remember, but I thought again, you will not go into the circular again, 801/23. If at all, you can by heart or you can remember, just have a slide, this one. Okay. So very difficult to remember. Myself, I'll ignore this slide, but I have kept it for you so that if you want to remember, you can remember. If at all a question comes, you should not blame me that you have not given in the slide. Then forensic audit policy for loan accounts. So forensic audit means abbreviation, the full definition also very important to remember. Just for, if you remember once, we can give the answer. Examination and evaluation of entities or individuals. For audit means examining. What they are auditing? Financial information. That is very important. To determine if they are actual or lawful. That means whatever financial information they are giving, like balance sheets, all these things, those things they are verifying whether they are accurate and lawful is called as forensic audit. Okay. So very important full form we should remember. Remember this word called financial information. Forensic also start with F. Answer is also financial information. Then May 2015, RBI provided an exhaustive list of 45 warning signals that banker need to watch for while monitoring borrowers' different fraudulent behavior from genuine stress. Question May 2050, 45 warning signals Reserve Bank of India has given. Then regulatory guidelines. Regulatory guidelines is early detection and reporting prevention of loan account with the exposure of 50 crores and more. With regard to forensic audit, regulatory guidelines is RBI issued for early detection and reporting with exposure of 50 crores and more. And the forensic audit, within how many months it should be completed? There are two answers in this particular circular I have seen. One they have told 3 months. In one place they told 2 months. Here they told the forensic audit must be completed with a maximum period of 3 months from the date of meeting authorized audit. In somewhere they says 2 months and extension 1 month. Somewhere they say only 2 months. So just for your understanding, I'm telling you. So I don't know whether the question, this question came to us. That's why I'm telling. So forensic audit to be completed within period of 3 months from this particular line. Within 15 days of completion of forensic audit, the lenders, if it's a consortium and all, the lenders will be convened to decide on the status of the account either by consensus or majority rule. So once a forensic audit given a report within 3 months, now the lenders, members in the consortium or anybody, they have to take decision within 15 days and they have to report RBI also such type of frauds within 15 days. Then forensic audit policy would be applicable to following identified accounts. Which accounts forensic audit is applicable? Not all accounts. They say account classified as SMA2 and NPA category with 25 crores or above. So amount classified in SMA2 also we can go, not even NPA. SMA 02 or NPA 25 crores and more. Red flagged accounts also 25 crores and above. So both are 25 crores only. Remember, SMA 02 में रहेगा तब भी जा सकते हैं हम लोग. Account NPA नहीं हुआ है. Without NPA also SMA 02 जा सकते हैं. NPA भी जा सकते हैं. 25 crores and above. Red flagged accounts 25 crores and above. Now forensic auditor working as an auditor of the borrower entity for the last 5 years shall not be given the assignment. For example, any forensic auditor we are working, that forensic auditor is a accountant for our borrower only. Then last 5 years, if he might have been auditor for that particular borrower, then we cannot allot the work to him. So 5 years is the answer. That's all. Time limit. Again, you see here, forensic audit must be completed within a maximum period of 2 months, extendable by 1 month from authorizing the audit. Here they said 3 months. Here they said maximum period 2 months, extendable by 1 month. Somewhere they given in 2 months again. Okay, so remember 2 months, 3 months is the period, or 2 months plus extendable period is 1 month. Panel valuers lodging complaints. See, any chartered accountant has done any fraudulent balance sheets and all, so we will report to ICA. Okay, Institute of Chartered Accounts of India, I think. Okay, complaint when we are filing, we have to pay some fees. That fees is 2,500. Then norms for empanelment of TEV consultants, external people also we can. Generally, we will have our TFOs and all, they will take care. Other than that, we can go for TEV consultant. External also we can recruit them. Generally, empanelment is restricted to companies, LLPs and partnerships. Then experience, minimum 5 years they should have. And undertaken TEV studies, 10 high value projects. If at all they have done 10 high value projects with 5 years experience, then only we can take him as a TEV audit, TEV study. Wherever empaneled stock auditor, statutory concurrent auditor of the any auditor of the bank is not, see, already is a stock auditor or a statutory auditor or a concurrent auditor, then we cannot give him TEV study. Empanelment 3 years only. Allotment kitna? Allotment, one TEV consultant shall not exceed 3 in a financial year. Maximum 3 in a financial year we can give. This is with regard to the fees of this TEV studies, how much fees. So again, it's a slide only. 1.10, 10 to 25, above 25. Project outlay, this is amount. Then minimum amount and maximum amount. Try to remember, I should not read this. Reading is, I don't like. So just I'm giving this PPT to you tomorrow. Just you can go through these charges. Then normal circulars now. 852/23. Very important circular. This circular also one question came to us. So one question may be kept for you. Consumer credit exposures in commercial bank. The risk weights increased by 25% and it gone to 125%. Then comes credit card receivables. Risk weights increased by 25% to 150%. Please remember, earlier credit card is 125. Now it is 150. They asked both dash dash. This also dash dash like that they can ask. So consumer credit exposure earlier it is 100%. It is earlier 100. Now plus 25 karke 125. Credit cards 125. Now plus 25 it became 150. So we can expect this question. Have a clarity. Consumer credit means personal loans and all 125% only. But credit cards very risky. So 150 like that we will remember. Personal loan is risky, credit card is risky. We feel credit card is risky. Okay, no security. Personal loan is minimum salary is there. So the RBI might have given 125 for personal loans and a credit card they made 150. 25% we will remember. When we will get confused, 125 or 150. If at all nearby answer comes means. Okay. Then comes to NBFCs. Bank credit to NBFC. Increase the risk weights of such exposures to scheduled commercial banks by 25% points over and above in all the cases where the external risk weight as per external rating NBFC is below 100%. Okay, this is one important change in that circular they have told. But I feel these two are very, very important. If at all it comes to bank rate NBFC means 25% points will increase when NBFC is below 100%. Now, with regard to one more important circular, that is CBPR, Canada Proposal Rating, corporate loans 50 crores and above, fund-based and non-fund based. So generally they will do added. They have added actually. Earlier it was not there. In CBPR, they have added environmental and social governance also. ESG also, climate risk also. They made a parameters. So these two parameters for added for what proposals? 50 crores and above proposal. 50 crores and above, that too fund based and non-fund based. But whom they will do this particular environment and climate changes, climate risk parameters? First time borrower they will do, new borrower they will do, existing borrower they will do, NBFC borrower they will do, borrowers under infrastructure projects also above 50 crores they are going to see under Canara Bank proposal rating for corporates above 50 crores. These two things are added, environmental and climate risk. And these ESG and climate parameters shall not be applicable for overseas borrowers and schematic lending. Irrespective of the exposure, they will not do. Modification in CRM policy, concessions in applicable rate of interest on upgradation of external internal rating. Concessions to be given for exposures above 7.5 crores only. Modification CRM policy, this is some slide problem there. That's why I'm closing the slide. Concessions to be given for above 7.5 crores. Wherever both external and internal ratings are available, concessions only on external rating. Always internal rating is for delegation of power, external rating is for rate of interest. Same thing they told, you not remember. But above 7.5 crores only, we can give concessions. Regarding modification for service charges for credit related transactions. So solvency certificate, maximum charges is 50,000 rupees, capped at 50,000. With regard to project appraisal, very important slide. This is 787/23. Maybe this is covered under our credit risk policy also, because I have not read 516. I have not covered 787. Very important change. I think day before yesterday also I discussed it with you. Again, I am repeating because it's very important to remember. First one is maximum. I told you project appraisal will be done by our TFOs at PAG group. When they will do, generally circle also can do. But project appraisal team, as per these guidelines, we should know about project appraisal group only. Whenever any proposal has come that is above 1,000 lakhs, if customer is new to the bank, so it has to go to project appraisal. They have to certify whether this project is viable for the bank or not. This is the purpose. So 1,000 lakhs new customer, it will go there. That's enough. Okay. Then existing customers. Existing customer bank categorized two types. One is based on risk rating, low risk, normal risk, and moderate risk. What bank says is, if he is a moderate risk customer, so bank said he is equal to new customer. So 1,000 lakhs and above. New customers also 1,000 lakhs and above, moderate customers also. Bank wants to give cushion to low risk customers and normal risk customers. That also, these are existing customers, less than 3 years dealings, more than 3 years dealing. If less than 3 years dealing means 1,000 will become 1,500 lakhs. If it is more than 3 years means it is 2,000 lakhs and above. So how I remember, normal new customer 1,000, existing customer with moderate risk rating also 1000 lakhs or 10 crores, whatever it may be. But existing customers, banks agree into two lower and normal risk customers. Existing mean low and normal, bank considered based on the attachment with us. If 3 years dealings with us, it is 1500. More than 3 years, 4 years, 10 years, good relationship with them. So it is 20 or 20 crore or 2000 lakh. This is a very important slide to remember. Here, agriculture also very important. Agriculture Innovation Center will do. AIC will do valuation. For general MSME loans and all, PAG group will do appraisal. For agriculture loans, Innovation Center will do our project appraisals. New customers, no such confusion like this. This is a confusion. Here, no confusion. Simple. New customer, 4 crore. Old existing customer, 750. And solvency certificate, capability certificate. Always they are maximum valid for 1 year only. Fees is 50,000 cap. Validity is 1 year. Now, service charges with regard to this certificate, capability certificate they have discussed here, up to 5 lakhs, it is 500 rupees. Above 5 lakhs, 100 rupees per lakh with a maximum of 50,000. This is whenever you are issuing a capability certificate or some banker certificates line of credit, these are the charges we used to collect. Then, movable, immovable release. Everybody knows this, security release and all. So, even this option is BA097, security release and all. This option they have asked to us. That's why I have written that. Now, simple hai, itna likha hai, but what the guidelines are very clear now. If any borrower has closed the loan account, within 30 days, we have to give the loan papers to him. Any loan closed means he is having power to take back his papers. Within 30 days, we have to give. If there is a loss, damage of documents, documents lost or damage ho gaya, so we will get 60 days time, like that you remember. Normally 30 days we have to return. Missing documents means 60 days time. Now you are not giving back the documents, penalty is there. For bank, if bank is not giving the documents to borrower, 5,000 per day penalty, very huge penalty for us. Then if borrower is not collecting, gold loan closed or a housing loan closed, he is not collecting, bank says, if housing loan and all means, it will be charged before 30 days. If they are not collecting within 30 days, 500 per month. Please note, for us it is per day, 5,000 per day, very costly. For customer only 500 per month. If gold is not releasing, if documents means 500, if gold means 200 per month is the penalty. So very, very important to remember. 30 days normally we have to release. Missing days, 60 days we have to release. If we are not doing within 30, 60 days in any case, bank will pay 5,000 per day penalty. If customer is not receiving the documents or gold, documents for him it is 500 per month and for gold it is 200 per month. Okay. Then comes authorization of ad hoc limits, 897/23. Ad hoc limits generally, ad hoc limits are TOL. CHM07 it will be authorized, only circle has to do. Of course, everyone knows now ad hoc is permitted by circle head only. So ad hoc limit, TOL limits, CHM07 is the option, circle is having powers. When it comes to TOD in SB current account, TOD in the respect to RO can do. CHM17 option is CHM17 for TODs in and ad hocs and temporary CHM07 option. If it is RO respect to RO, branch is related to RO means RO will authorize. If any branch is directly linked to CO means CO. For example, LCB, MCB, CO linked. So CO will authorize. Okay. Normal branches, RO means RO under means RO will do. Then comes restriction in authorized extension of working capital limits. So extension of working capital has to be done now. System level authorization of working will be now restricted to respect to CO, RO only. Simply one limit is expiring, just people are just like that extending for 3 months or maximum 6 months. One clause is there, credit policy part. So this branch cannot do now. If at all branch has done it in the CVS option, only RO CO has to authorize. Now comes 2024 circulars. Same CBPR concept only. So CBPR will be applicable for new proposals and renewals enhancement up to 10 crores for MSME, agriculture and corporate accounts. So 10 crores and above, it is applicable, new proposals. Now what they are going to see is for corporate loans, all borrowers other than those borrowing in individual capacity are eligible. They have to be done under CBPR. Now, MSME loans, as per MSME definition prevalent in the bank as per existing guidelines. Agriculture infrastructure loan, little bit we have to remember. Remaining nothing more. All corporate loans, MSME loans, okay, about 10 crores. That is very clear. But when it comes to agriculture, very specifically bank has told, but all answers are same if you observe. Loans up to 100 crore from banking system. And with our bank is only 10 crores. Then only CBPR is applicable. I think I'm clear. Agriculture infrastructure loans up to 100 crore from banking system, and our bank it is 10 crore. Same. Loans up to 100 crore from banking system and proposed exposure with 10 crores and more. Purpose are different. They told actually this is infrastructure lending. In priority class, I told you what is infrastructure lending: rural godowns, cold storages, oil extraction units, watershed soil conservation. All these are falling under infrastructure loans. Those infrastructure loans up to 100 crores classified under priority. Now here, what bank is saying, CBPR is applicable for that 100 crores from banking system. But your bank should be 10 crore. Concept is 10 crore. Na? So that's why bank said your bank is financing 10 crores and above in infrastructure lending for any facilities. Now you see storage facility, waterhouse, market, godowns, so storage units, cold storage. We need not remember if you know priority. So same 100 crore from proposed exposure, construction of oil extractions, biofuels, CBG plants, all are falling under infrastructure lending of priority definition. So we need not remember if you know infrastructure lending. Only thing you remember, even the definition also say infrastructure up to 100 crores. If you it's a priority. So all banks can give 100 crore. But your bank is giving 10 crores and more means CBPR is applicable. Like that, if you remember, we need not remember the answer. Food processing. Same rule. 100 crore per borrower. Food processing also you can see loans to food and agro processing. Definition is 100 crores. I hope you remember priority definition. Food processing coming under ancillary service under priority. So 100 crores, same borrower with 10 crores or more. Sir, this answer is relating to everywhere. That's all. You see, answer is related to here. So if you, this is a priority definition they told, this is what CBPR definition they told. That's all. Okay. Over. Now comes premiums. I think this question asked to scale 1 or scale 2. So term premiums, liquidity premiums. Whenever we are giving any MSME term loans or any term loan more than 1 year, we add term premium. Earlier we call as term premium. We used to call as liquidity premium. We are adding. Now this is called as liquidity premium. Now it's not called the term premium. So based on the repayment period, what we are giving, based on that, some premium they will add. So maximum 1 to 10 years, 1 year to 2 years, 0.10, 2 to 3, 0.15, 3 to 5, 0.25, 3 to 7, 0.30, 10 years, 0.30, 10 years, 0.45. So we have to remember there are 6 different tenors, 1, 2, 3, 4, 5, 6. So one slide is almost same, 5 to 10 years, it is 0.30. Okay, so just watch this table carefully. Question has come to one of our scale 1, 2, 3 people. Now comes empanelment of domain experts. 39/24 circular. Entrustment of valuation permitted. Entrustment of valuations will be permitted by PAG, Project Appraisal Group Head Office, for project sanctions of Circle Head CAC. HO power accounts, Wing will allot. Empanel, entrustment of valuation. This is entrustment. Now empaneling, we will see what they will do. See, these domain experts in this valuation of assets, technically complex projects, industries such as steel, cement, coal, metal, power, roads, ports, telecom, oil, refinery, automobile. These are little bit complicated. So these type of projects can be done by this domain expertise. Okay. What they will do? Immovable, movable, they will do. No confusion. Minimum is BTech. Minimum BTech they have to complete. Experience should have 5 years experience. They should have minimum. And minimum 10 high value projects they might have taken, and with project cost of 250 crores and above. Very, very important point to remember. Project cost of 250 crores and above. It's a very big, na? I told it's a complicated. So they told 250 crores and above projects, 10 above they have done with 5 years experience, then only they can be empaneled as a domain experts. Then duration of the empanelment is 2 years, normally 2 years. After satisfactory performance of 2 years, this can be extended for another 3 years. After that, it can be renewed every 3 years. This is their duration of empanelment. Now comes valuation fees. Valuation fees is less than 5 crore means 0.075%, maximum 25,000. 5 to 25 crores means 25,000 will come here plus 0.05% for securities above 5 crores and up to 10 crores subject to maximum fees of 10,000. I don't think we need not remember this one. We need not remember. This is almost, this is 5 to 10 crores only. 5 to 10 crores. So subject to 0.05% subject to maximum. Just a minute. I'll remove this because we need not remember. Because here itself we have written 5 to 10 crores. So 0 point value of security. This is important. That's all. Subject to, this is also value of security about 10 crores only. Subject itself, it is there. Yeah. So what I want to tell you here is 5 to 10 crores means 25,000 plus 0.05% of the value of the security, maximum 50,000. Above 10 crores means 50,000 will come here plus 0.01% with the security, maximum 15 lakhs. So very difficult to remember. Just try to remember remaining all. Anyway, we need not remember 10 years high value projects. Please remember this 10 high value projects everywhere it is coming. Except in one case, I have seen 5 high value projects. We will remember what is answer is 5. Remaining, if at all question comes, you will go with 10 only. I think 5 high value projects are there. In one, I don't remember for which value they told. I think normal value, I think, or a SARFAESI value, they told 5. Let us see in the last 2 years minimum. So this is the fees for them. Then with regard to credit related revalidation of working capitals. See, whenever there are revalidation of sanction, we are doing the charges. Very difficult to remember, but I don't have a choice. I have to tell you what are important. Up to 5 crores, 50% of the PC. I'll not read out. Just you remember this is for working capital limits and this is for term loans. These are the revalidation. Whenever a sanction is getting revalidated, these are the charges we have to collect from the customer. One thing I want to tell you, answers are same if you see. All are same. And one more thing, working capital, it is 50% and term loan, it is 30%. Minimum that much you try to remember. All are working capital is 50%, term loan is 30%. Amount are 70%, 3.5, 10 lakh, 15 lakhs. Remaining, we need not remember all these things. But amounts we have to remember same. 5 crores, 5 to 25, 25 to 100, above 100. This is also same. This is how when you are reading, you have to practice. 5, 5, 25, 25 to 100, above 100. Working capital means 50% charges. Term loan means 30% charges. Those slab khatam. Now, this you remember for one. 75,000, 3.5 lakhs, 10 lakhs, 15 lakhs. Over. These charges we need not remember. In a commission for a bank, extension of bank guarantees. Bank says BGs with amount of 5 crores and above. Commission for the extended period may be completed for the completed number of months. Part of the month will be treated as a, I'll show you. Part of the month will be treated as a full month. Okay, 5 crores and above. This you remember answer with regard to extension of BG. Takeover accounts with other financial institutions, they made some change. Account should not have appeared in SMA 2 during the last 18 months as per Greek report. Very important change we have to remember. Account takeover of borrowable accounts from other banks when we are doing, the guideline says that account should not have been appeared in SMA 2 during the last 18 months as per CRIC report. Very important point. In case CRIC is not applicable, then we have to see CIBIL report. That's all. ABS of previous 3 years shall be obtained and analyzed. This is already there in the takeover guideline. No need to remember. And ABS filed with ROC also to be verified for the last 3 years. That also logical checking. Further, ABS should not be older than 9 months. Very important point. 4 important points. This is very, very important. SMA 2 and during the last 18 months as per peak. SMA 2 during last 18 months. Then penal charges. Generally, we know term loan means 2% outstanding liability, which we know pretty well. Fund-based limits also 2%. Yeah. Non-fund based, you see very carefully. It is 0.5% of sanction. Remaining all 2%. Generally, penal means we will go with 2% only with our experience. But non-fund based limit, it is 0.5%. Then whether anybody can waive this penalty? Yes. Next higher authority, not below circulant CS. HO power accounts, respective sanctioning authority can do it, and MC sanctions, CAC of the board has to permit. Delegation of powers for waiver of prepayment penalties. This slide, I don't know. No question has come to us, but just I'm giving you one information in one place. You see, bank has fixed some exposure ceilings, unexposed consumer credit card receivables, unsecured advances. I don't know how you will remember, but minimum one or two you remember. Luck gets, we will get. Short-term corporate loans, out of which unsecured 40,000 crore. Term loan outstanding enhanced to 660 crores. They're all ceilings. Hurdle rate grades, 12,000 crores. All I have kept in one place. What help I have done is I have kept in one place so that if you want to buy hard at the end of your preparation, just have a glance. These are all exposure ceilings in 2 pages. I have kept 2-3 pages. So many circulars came. Definitely examiner is going to read all these circulars, but I don't know whether he's going to pose question or not. Again, same. All exposures only. Exposure to NBFCs, exposure to non-SLR investment, unsecured advances, government, all these things, single borrower. So very important slides. See, exposure ceiling on top 20, top 20 borrowers, 20, like that. Something you will remember. Top 10 borrowers, gross exposure 15,000 crores. Unknown client, some word is there, capped at 18,500 crore. Minimum 510, you try to remember. If these matches, you can go to the nearest point. Bank exposure to single NBFC, excluding gold loan, 20% of the eligible capital base. This we will remember. In Basel also, we do the same thing. So we will remember this answer. NBFC is predominantly engaged in gold loan. So 7.5% of the capital fund. Then comes again exposures, global exposures, with regard to industrial, domestic, overseas, then domestic kitna hai, okay, overseas, investment exposure, all our exposures they have given. Yeah, though these 2-3 slides I can't help, so I don't know how you will remember. So there are so many answers are there. Now come to important change with regard to risk tires. Let us change a 198. So whenever we are giving retail loans to customers, retail lending loans. Now we are following, earlier we used to follow CIC. Now we are following CRG, right? So what the guidelines came is, when a customer is getting worst CIC or a worst CRG, when we are giving exposure to them, it should not be more. So bank told it will be restricted hereafter. So first of all, bank named two people here. So one is near prime, another is subprime. Whenever we are doing a CRG for a housing loan or a car loan, whatever loan, CRG prime will be there, CRG1, CRG2, CRG3, CRG4. 3 is moderate, 4 is high risk. So these people are called as moderate, will call a nearby prime, subprime is called as, CRG4 is called as subprime. When CRG is not applicable, some loans are there. For example, Canara pension, we are not doing CRG. So when CRG is not applicable, then they will see CIC to decide. So subprime means CIC score is worst condition. 300 is the worst score, 300 to 680. And nearby prime is 730 to 681. This is what we have to remember with regard to this near prime and subprime. So whenever a borrower is defined under this CRG and subprime, first of all, I'll tell you the most important point is rate of interest. Near prime, okay, bank has not gone extra. But when it comes to subprime, bank said, last slide I'll show you, last point, rate of interest 0.25% extra. For near prime, no interest. But for subprime, it is 0.25% extra rate of interest system we will charge. This is with regard to rate of interest. Now let us see what bank is going to do. Now these customers are not risk customers to us. So bank wants to have a triggering. They don't want to give more loans to these people. So how much? So what they have done is fixation of limits nearby subscribe under it in order to contain the concentration of lending in near prime. We can't give loans to risky people like CRG3, CRG4. So, and also they want to monitor these people. So maximum ceiling under nearby subprime on the fresh is fixed in a financial year. In a financial year, what bank has decided is we cannot, nearby prime means maximum we can give 10%. CRG is a better customer than CRG4, so 10%. Subprime customers, bank says only maximum 5% of retail lending loans only we will give to these customers. First of all, we should remember this. 10% and 5%. Near prime means 10% of the loans we will give under total retail lending, and subprime means 5%. Now triggering. So head office should know now when we reach 10%, we should stop lending to them. So they have a triggering concept. If CRG means it is 9%. CRG not applicable means 8%. If 5% means triggering is 5% means CRG applicable means 4.5%. If CRG not applicable means it is 4%. How to remember? 10 and 5% you remember first. Nearby prime is a good one. Better than subprime. This is worst. This is bad. Like that you will remember. So this is worst. So 5% only. Triggering is 5% only. Maximum 5% of loans you will give. 10%. Exact 10% you see. 10 ka 90% is 9%. 80% is 8%. So from year to year, 10% reduction was there. From year to year, 10% reduction was there. Same thing here also. 5 ka 90% is 4.5. So 10% reduced. 5 ka 80% is 4%. So 4%. So if you reduce 10%, first it will come. Automatically it will come. Another 10% if you reduce, it will go to CIC. This is, you can say this is CIC. This is how bank fixes the limit and they will monitor the subprime and near prime customers. Okay, this is what we have to remember. These numbers also you have to remember very carefully. Very important circular 198/24. Nobody got any question, so question can be expected from this slide. Subprime customers, worst customers as per rating is concerned. So when we are giving gradation is not good, then falling up to the power of RO at CAC, next to higher authority up to the delegated powers they can sanction. If falling above the powers of RO at CAC, respective CAC can do. So falling up to RO at CAC means circle head will do. Circle head means circle head will do. That's all. Okay. This is what with regard to this new concept called risk tiers. So see, near prime, subprime, CRG3, CRG4, CIBIL score is very, very important. 300 to 680, 730 to 681. Okay. Then 10% is the maximum loans we can give for near prime. 5%. This also you'll remember. Is a bad party in our credit risk rating part, bad party. So 10% is not at all bad, worst. So it is 5% bank. After that, they will do triggering. Triggering means 10% minus, then 10%. 5 ka 10%, 10%. Like that we have to remember. Guidelines with regard to balancing of loan papers. Everyone knows that balancing, EMT balancing, we have to do on half yearly. That is 20th of February and 20th of August every year. And RO will designate one officer not below scale 1 to verify. This is 266. One more circular has come, very important. Let us see that. Okay. Then scheme of discounting and receivables HAM road projects. They have told CAC of the board and above authorities may permit this facility and it will be restricted to external rating is BBB and better. Internal rating is moderate risk and better. Internal is moderate, external is BBB. Then comes Prosper. Prosper is also credit policy circular. Everyone knows about Prosper. This is a turnaround time action by the branches. So they can ask one simple question from here. We have to remember. See, automatically, once this level as, for example, branch is not T plus 7 days, automatically escalate to RH. Like that, they have given time norms. So let us see how to remember these answers. For examination purpose, you have to remember, very important. Housing loans and mortgage loans, everybody, it is 7 days. Retail loans, you remember only two numbers. Only two numbers. Housing loans, mortgage loans, 7 days, because we know that process will take some time. So 7 days. Vehicle loans and personal loans, very fastly we can do. So 2 days. So 7 days, 2 days answer se khatam ho jayega. When it comes to Sulabh, MSME proposals, time will be taken. Sulabh linked branches within 7 days. Non-Sulabh branches, maximum 5 days. It's a big table, but very easy to remember. Bank has not made so complicated. So retail lending, mortgage loan 7 days, non-mortgage loans 4 days. Over. Sulabh means Sulabh linked branch 7 days, non-Sulabh is 7 days. Agriculture 3 days. Agriculture is 3 days. Credit card and all 7 days. So this is, you have to remember, Prosper. Any one particular thing they may ask. For everybody it is same. Branch also turnaround time is same. Everyone it is same. So like that we can remember. Otherwise you can remember agriculture it is T plus 3 and non-solar branches T plus 5. So these are odd man outs. This anyway we will remember. That's not an issue for us because housing loan and all it will take some time. T plus 7. Vehicle loan and personal loan we can pick T plus 2. Okay. Solar and all you remember 7 and 5 and agriculture is 3 and credit card is 7. This is fixing of intergroup transactions and exposures. Again, one more exposure only, but in the circular something point is there. So intra-group transactions maximum limit is 13,500 crores for 2025. Now comes if the single group entity is there, aggregate group exposure. Two norms are there. So how to remember is if it is a non-financial companies, unregulated word he has used for single group, only 5% paid up capital reserves we will give. If it is a regulated financial services, 10% paid up capital. This we can remember easily. So unregulated word he has used means we know that less amount will be 5%. Regulated means 10%. Aggregate group almost double. Iska double hai ye dono. If they are asking about aggregate group, then unregulated is 10%. All group entities 20%. This is how it should be remembered. And this is the maximum ceiling they have given. What they are telling is where the utilization is crossing 90% of the ceiling, then immediately they should have a checkpoint. So they have to take up the matter with us while considering the proposal in order to have a transgression of ceiling fixed. 13,000 is the maximum exposure. So within that, they have given for single group and aggregate group. Single group means 5%, 5% means less percent, unregulated people. Regulated people, 10%. When it comes to total aggregate means double, 10%, 20%. Unregulated is 10%. So unregulated single is 5%. Group is unregulated aggregate group is 10%. Regulated financial 10%. Here the all group entities they have not used a word called regulated here like that. Okay, 90% ceiling reach karta hai to they will inform to the concern. Modification of service charges in credit transactions. So with regard to handling discrepant documents revised under LC, charges for handling discrepant documents received under LC, 0.25% of the bill amount with a minimum of 1,000, maximum 5,000 per bill. Okay, minimum 1,000, maximum 5,000 per bill. This is 469/24 circular. This is one more modification with regard to risk rating only. So additional guidelines are review of pricing. See, when an external, in case any external rated account moves to unrated category, then we will charge additional rate 1% over and above the contracted rate. So review of pricing they will do for a competent permit additional guideline review of pricing in case of downgradation of external rating as under. If external rating is moved to unrated means 1%. If downgradation rating by 2 or more notches means I told you low to moderate is a 2 notch down. Low to high risk is more than 2 months. So if such low to high risk, sorry, to more than 2. If such type of more than 2 notches down, then bank says we will take 25% additional collateral within a period of 6 months. That much you have to remember. So if 2 notches down means we will take additional collateral of 25% within 6 months. If party is not giving additional collateral within 6 months, then party has to pay additional rate of interest 1%. This is also unrated also 1%. If party is not providing additional comfort when 2 notches are down, 25% additional, then also within 6 months he has to provide. If he's not giving within 6 months, we add 1% extra rate of interest. In case of account turning to NPA, penalty is 2% per annum on the outstanding to be levied. Okay. Further concessions, if any, shall be immediately be reviewed by respect to sanctioning authority. Not so important. Exercising EMT, very important change. Generally, earlier we are taking encumbrance certificate at the time of mortgage only, unless our advocate will give. Now guidelines they are saying now easy to be obtained every 3 years. Once you have created mortgage, after 3 years, again you have to take EC, and thereafter also every 36 months. That means after mortgage, every 3 years we have to take EC and verify any encumbrances there or not. So modification of CRM policy, some modification that Basel framework, RBI provides two broad approaches for credit risk to calculate capital adequacy ratio. One is standardized approach, another is internal rating based approach. Facility rating, everybody knows that facility rating is above 7.5 crores. It is applicable in the circular they have given. Now, same balancing of loan papers, I told you, every branch has to give half yearly one confirmation to RO that 20th of February, 20th August, everyone has to take balancing, EMT balancing. Now, some specific dates they have given in 600/24. First of all, branch has to submit when 20th February, 20th August is over. Now, 28th they have to submit a report. That means 20th they have to take balance within 8 days. That is 28th February and 31st August. They have to. There is month end only, you can tell. February month end and August month end. They are supposed to submit the report to RO. Then RO will depute one official, not below scale 2. By 10th March or 10th September, exactly after submission due date, 10 days. After 10 days, RO will depute one scale to verify whether the papers are available or not as per balancing. So he will check. Exactly after 20th March and 20th September every year, RO will send the report to CO. And CO will send the report to HO by 31st March and 30th September every year. This is the dates. Very, very important is 20th September, 20th August, they have to do month end, 20th August, 31st August, they have to submit the report to RO, and RO within 10 days, they will send one RO official to verify. And this programming, who has to go from RO, timeline for appointing RO, 25th February, 25th August every year they will do. That means in between this period itself, they will decide who will go to that branch for verification. Exactly 20th to 31st, na? Half of the day, 25th August. So February 20th, 20th, 25th February. So in between the day, they will decide who will be deputed to verify the documents. So one more change is brickworks. Brickworks. Earlier, Reserve Bank of India told brickworks now they cannot do any ACAI rating. Now recently again they have been inducted, and but not exceeding 250 crores only they can do. So brickwork can do only up to 250 crores now. This is what 250 crores. 10th July, and the rating agency should have reviewed the rating at least during the previous 15 months. So this is one important circular came 608/2024. Up to here I have covered all the circulars whatever came. So brickworks, you remember, from 250 crores they have started now up to 250 crores, sorry, not exceeding 250 crores. Okay. So with this, whatever modifications came in trade policy I have covered. Yeah, I'll stop here because I have completed the part of credit policy changes. But the credit policy is a very big circular 516/520 that I have not covered. This is what this presentation with regard to credit policy changes, which are very, very important to remember. Some charges and all, few tricks I have told, few tricks you have to keep to remember, especially numbers. So up to here is okay. Now, the year onwards, I will try to give you this presentation. This is last year presentation. See, same. See, this is the valuation of property. Just now we discussed vacant site. Same thing is available in CRM policy also. 12 months. All are repeated. All are repeated. Gifted, guideline rate. Same changes. That means there will not be any change here. Okay. So good night. I'll stop here. I'll not continue the class from here. So if possible, I'll give the presentation by tomorrow by editing 516/520 also, so that you will get a complete presentation of credit policy and CRM policy. Only left out will be recovery policy, which I may not cover before your exam. So before exam, definitely I will give you this PPT. Keep this pending. Other than that, remaining all are already available in my drive. You can start, but I'll complete this, and some digital part also. I think I should give some points. I will prepare a separate presentation and give you. Before ending the session, I would like to tell you there was a group for scale 4 to 5. Around 750 people are there. If you are there in that group, you need not. Otherwise, you can message me so that I can add in that group. Tomorrow class is there, what time, all these things in that group I can post so that I can reach you very easily. That is the purpose of that group. So thank you very much. Sir.
Yes, sir. Sir, I'm available, sir.
Yeah, can you stop recording, sir? I'll give my number.
Yes, sir. Sure, sir. 1 minute, sir. Thank you, sir, so much. 1 minute, sir.